Hello, everybody. We're back with the Tokyo FinTech podcast, and today we welcome Kyle Ellicott, who is an investor, founder, and analyst. Welcome, Kyle. Good to have you on the show. Would you mind introducing yourself for a few minutes?
Yeah, absolutely. Thank you. Again, it's an honor to be a part of this podcast. I've had the pleasure of listening to it for some time, and we've shared stories offline together about our journeys in Asia and everything that's been happening there in the world of finance. And I'm excited to talk with you here with the next hour, and hopefully listeners will get something out of it and see some value, which is good. And a little bit more about me. I've been in technology and innovation for what seems like forever. It's well over 20 years at this point. And during that time, I've had the pleasure of being a part of different innovation waves, whether it be the early days of web to the early days of connected devices and the Internet of Things, and now this world of open finance or decentralization and blockchain that we're moving into, and even furthermore of distributed connectivity. I'm the co-founder of a company called Topio Networks, where I do a ton of research and analysis work around the industry of blockchain at the infrastructure level, reviewing hundreds and thousands of companies around the world, along with venture funds, as to what's happening in the space. And that evolved into decentralized applications and DApps, to DeFi or decentralized finance and open finance. And at the same time, work with venture funds in the space, do investing in a few other ways as well in the venture space globally, and have the chance to be a founder a few times over. Some hard lessons learned. Yeah, really excited where this future of goes. And what I mean by that, we're going to dive into whether it's the future of finance, it's the future of technology, it's the future of innovation, future of work. There's so much that's happening right now in the world. And I'm excited to share my stories in Asia and what I learned there, what I've learned here in the States, and what I see in the overarching landscape that is open finance and how things are moving, shifting, and changing, and talk about my time at Topio and my time investing around the world as well.
Super. Very glad to have you. And so let's get the show on the road. Thank you.
Let's do it. I'll give you the short version to focus for us. For me, I've been in the space of founder to investor to analyst to call it a technologist at the end of the day, right? Having my hands in areas of all sorts of technology, some before the curve, some during, and some maybe too late. But for the most part, usually on the early side of the curve. It kicked off, I would say, pretty aggressively around the connected devices, the Internet of Things revolution, if you want to call it that, about 7 years ago. And during that same time, started to hear about this thing called Bitcoin. And as that all began to develop, we started to hear more conversations around improvements around FinTech and financial technologies. I spent a lot of time in Asia, specifically in Hong Kong. Okay. So there was a lot of focus around financial technologies and just being open to this world of what today is present, but then was the future of how we would engage on a financial level. And then how that progressed into my work into blockchain, decentralized applications, and now DeFi. You go back to kind of the money revolution and you look at where we are in the States, comparably to Asia, to Europe, we still use checks, right? Up until recently was the idea of a digital currency, and even talked about on a national level. Whereas in Europe has been using credit cards with chips in them for years, for a long time at this point. I don't remember the exact date, but I believe it's more than 15 years. We had to teach ourselves how to use that here in the States. Whereas then you go to Asia, so the complete other side, or Africa. In Africa, or Asia, you've got people, which is what opened my eyes in probably 2015, this idea of open finance, whatever term people want to give it today, this new form of financial technology where everything can be done cashless. It can be done inherently within an app. You don't need to have an actual physical bank, because in some cases you couldn't get one, and you can now transact and interact through an app, right? That was how people, and went even further where you could pay your bills, you could donate to charity, you could rent through an economy, you could pay rent. These were things that mind-blowing, but still common sense. And then you look at Africa, and what Africa has done, for some may seem very primitive because it's the idea of using mobile technology, so mobile to mobile, to exchange some kind of currency, whether it's data, it's a digital currency, whatever it may be. They are the most set for a forward-thinking way of our future in technology than anybody else, because everyone from the smallest village to the largest city understands how to do mobile payments and how to do mobile finance. So for me, I've played all the roles. I've gone investor to founder to analyst. I spent a lot of my time today in those three areas. I do a ton of research in blockchain, aggressively researching things at the infrastructure level since 2018. Probably looked at over 3.5+ thousand companies and venture funds, mapping against trends, what's happening, what's not happening, how that's evolving into into DApps, the future of apps, and then DeFi into the future of finance.
My question on Africa will simply be, given that we have things like M-Pesa there, many of these new blockchain protocols say we want to bank the unbanked, but the unbanked, at least in certain parts of Africa, have M-Pesa and it works. Maybe there's something that works more elegantly, but actually they don't have a problem. It was mind-opening for me when we had DEF CON in Osaka here last year. They were promoting a hackathon in Lagos, so it was East Lagos. The problem statement they had was power, electricity. The hackathon was around making sure that you get uninterrupted power supply, because people can't really work. They have like 3-4 backup generators in their house. This lady who was working for Consensus, well, if you don't have power, you can't even work remotely, right? And so money wasn't their first problem. Maybe it was the second. Clearly, their focus was more fundamental things, I would say.
There's a few layers to that, right? The mentality or mindset, people convincing or understanding like, hey, this is something and we should be paying attention to it. Like, it goes back to the US-Europe comparison, right? A chip and a credit card, insert your card. We do that in an ATM. Why should it be any different at a grocery store? But for some reason it is. So you've got that mindset mentality. And then from there, you have the actual infrastructure to support it. And then you have the actual engagement layer as well. And then it becomes a habit. And so those steps up are just big building blocks. They sound easy because we can talk about them, but they are huge pieces. Again, another good comparison. So Libra as it is, right? We don't need to dive into it unless you want to, but Libra as it is, I did an article with a partner of mine. He and I compared Libra as potentially one of the biggest decentralized apps ever, right? With this inherent market from Facebook, and that it would rival what WeChat and Tencent had built, or Tencent and WeChat. What Libra was trying to do in some parts, Calibra was no different than WeChat in some cases, right? In some others, that's fine. Libra was just a bigger step of like, let's create a stable currency around this. Well, WeChat has those capabilities. They have more than what Calibra wanted. They have a currency. It's the renminbi that's actually being used digitally between everything. But here the mindset is not to that. The average person may not understand the connection of paying your rent inside a mobile app that you also socialize it. Being very fortunate to be on both sides of that, I get it. That's one of those big roadblocks that we're going to hit in this world. I know others are including yourself, super excited about the world of open finance or future finance. There's so much when it comes to a mentality standpoint that we can have the infrastructure ready for days. It's up here as to when we start engaging with that. And it took me a while when I was in Asia. I tell you what, the first time paying rent, first time paying a utility bill, first time getting a red packet, and all of a sudden being given a few cents or a few dollars, in respect, like it was different. And then it became part of life. And if anything, it was wilder to me when I came back and I didn't have that, where I couldn't just send you this or receive that. And I couldn't do everything in once. It said the kind of ironic phrase is it went from centralized to overly distributed again, where in one place I could do everything pretty much. But now I come back to the States and I got 15 different apps.
You can probably go online to your bank and then order physical checks that will arrive in the mail like a week later. So you can actually pay your rent.
You take a step back. What's really crazy about all this is what can happen once it's streamlined. So today, let's consider globally the financial systems in place can be very heavy, right? Lots of roadblocks, very friction oriented. Well, now what happens when that friction starts to get removed? What else can we do, right? What else more do we do, right? When those layers of the onion just disappear or melt. Those things to me are exciting. When I can send you money in an instant, that's one thing. I mean, that's not too revolutionary, right? What more time do I have when I don't have to figure out where do I go to donate here? How do I pay my taxes? How do I pay my rent? How do I get money to you? How do I rent a bike? How do I get a flight? It's just all in one, right? Those seconds, those minutes, those hours that we spend on that, those things could come back to us in different ways, right? Instead of just opening up channels. The thing that I found very interesting when I was in Asia around FinTech, and I saw this in Hong Kong, and I saw it bigger in China and then bigger throughout Asia, in more places I was fortunate enough to travel, is the amount of emerging markets or general markets that became open for everything because of this technology. And I think we arguably saw this with the introduction of services like PayPal, right, when it first came online. And then later with other services, including Venmo here in the States and more in Europe, and then again, more in Asia and South America and the like. But in China and in Asia, what WeChat did opened up this, hundreds of millions and more user base globally that now could financially interact, socially actually connect in ways that people had only dreamt of. And to them, it was common, and even myself, it was commonplace. That to me is something that I think is just so powerful and fascinating, and is something that we fortunately haven't gotten to in a lot of places. And when you think about the power of that, you can literally open business and do business anywhere. You're no longer constrained. And you may be using a singular currency that gets exchanged on the back end. That's a different conversation. But now everything is open, right? I can be living in San Francisco and I can do business and transact in business in Hong Kong, no questions. Or a better example, in Bangkok. I can socially engage with someone in Istanbul while being in New York. And then on my way to Asia, be able to handle posting a social post for an event that I'm going to speak at in Indonesia. What sounds very basic for how connected we are, the systems haven't been in place truly for us to do that, and now they are. From a fintech perspective, we're starting to see that happen bigger and in more places. In some cases, maybe culturally suited, right? So like we talked about in China, there's, WeChat is there and it has seeded its way globally pretty quickly. China was very lucky in that fact that it had it was an emerging market. So there was a base layer for it to start there and grow upon, go from cash to that, skip all the stuff we're stuck on. And for us, it's taking a long time because we have that infrastructure in place and we're stuck on it. In some cases that it's hard to add additional layers on top, or it takes more time. And then you look at Africa at the very early of its emergence, and it can skip all of it, right? It can go to mobile payments. It can go to a digital currency. It can go to whatever it wants. To me, like where fintech, what we used to refer to as fintech even 5 years ago, is so much more different than it is today. And when we talk about things like DeFi and open finance and all these terms of bankless, is all encompassing of where we're going. As these technologies start to come on board culturally on a global scale, our mindset changes and these things become more normalized.
Lots of different vectors in there. And if you look at, let's say 2015, which that was a date you threw out, and the early fintechs maybe, to a certain extent, they were very focused on one function within the financial services area, right? So if you take a bank does 18 businesses. The fintech typically did one, and they started the second or third. So we're very, very narrow. So that's one thing. So it's a decomposition component of banking. I would argue to a certain extent they were also lipstick on the pig, simply because the user experience with the traditional financial services player was so bad. If you had a good UX, it simply attracted, especially the younger generation. It didn't necessarily change the business model. How would you see that having devolved up to now?
Yeah.
And, I mean, it's a leading question, I would say, right? There's some recomposition that's taking place. And then when we go down the DeFi route, it actually takes us to the real componentization of all of the financial system.
Yeah, so it's a great starting point. So go even 2010 to 2015. We'll just use that we'll use the decade as the tool of measurement here. So for anyone listening, that's our tool. We understand there's something previous, but this is our tool. So from 2010 to 2015 and into 2015, you're right. It was a very similar mindset and focus for financial technologies or fintech. And it was around payments, transfers, and kind of the enhancement or improvements of traditional banking. I want to get you money, you want to get me money. I want to improve payments for retail. I want to improve payments for agriculture. I want to improve, again, it's all about transactions. That was very, very simple. Banking and payments. Then 2015 into 2016, there started to be a little bit of this shakiness in the disruption, as we'll call it, a Star Wars reference, disruption in the Force. And that was kind of this tipping point where people started to look at what else can we do? What else may be broken, or what else should we have? And what else can be leveraged? Again, what else can be broken? And I'll come back to that in a second. So with all of the previous led, you started to see the rise, more talk about blockchain, more talk about digital currencies, which we'll just sum up everything unless we need to be specific. So digital currencies, you started to see this idea of an exchange and marketplaces. Now bringing the power of transactions even further into micropayments, into these micro transactions, all the way to the smallest of the small, like we said, the smallest merchant, the smallest village, all the way through to the largest. So now you've removed the friction or the discrimination in some cases of having to acquire the technology you need to do what you're looking to do from a financial perspective. And then with all that said, there's starting to be challenges to the norm of like, well, what else is out there? What else, what more can we do? And if we're using this technology called blockchain to integrate with some said fintech product or other product, how do we make it better? How do we improve it? How do we scale it? Now you've got infrastructure. Right? Now you've got developments and growth around the infrastructure of what blockchain started and what it's now becoming. And then going into 2016 and 2018, you saw this focus. We've solved transactions, or we can improve more. Let's get them faster. Let's get them out more wider scale, right? And let's make it even less frictionless than it is. But let's work together with the banks. Let's, as banks or as financial institutions, let's work together with this ecosystem. So this is where innovation from the startup mentality to the corporate mentality starts to come together and say, oh, well, yeah, we should be doing that faster. Someone else is doing it. How do we do it? How do we integrate? How do we test? How do we survive? That's what it comes down to keep our customers, to make our customers happy and to plan for the future. And that's when you really started to see scaling of mobile payments to the trials and errors, the goods and the bads of a lot of things we saw in blockchain through those and highs and lows waters. We also saw fintech and its whole start to improve on the infrastructure, start to work on these types of problems, start to test things early around applications or new business models or faster infrastructure, faster transactions, to leading up to where we are going into from 2019 to 2020. I'm skipping over a few points. Where we are in 2019 to 2020 is now the idea is there, or the demand is starting to come. And those demands and desires are, what else can I do? How else can we challenge the norm, right? So with DeFi, and we'll just use that as open finance, what has happened is now we've improved transactions. We've given power to the mobile. We've improved infrastructure, which can still be improved. We've tried some new features, some new apps. Now, how do we take what's traditional and make it more digitized? How do we improve further? How do we bring lending in? How do we increase things like interest rates? How do we improve currency exchange on international transactions or payments or business? So now you have this world that all of a sudden is opening the gates. So call it from 2015 to 2019, 2020, a lot of things were being tested, a lot of things were being refined, and now the floodgates are opening. As we move into 2020 and in the years ahead, where let's digitize this all. Let's give even more features. Let's give more abilities. Let's give more opportunities so you as the consumer can make more money off of your money, right? The whole conversation around, well, I have a savings account, so I earn 0.01% interest a year. But now I can take that same money and I can open up an account and I can make 7%, right? I can actually use some of that money and lend it. I can stake, right? These commonly used terms now and I can get something more for that, right? I can digitize the loan process, the lending process in a way. I can exchange currencies. I can actually exchange anything. I can buy digital assets. All these categories we talk about in commonplace in our day-to-day, that's what those 5 years were doing. And some places were a little further ahead in its testing and it became commonplace, and others not so much. I mean, here in the States from 2015 to 2020, you saw us go from credit cards with chips being introduced to now, challenging the norm, but really looking at mobile payments, looking at doing everything on a mobile contactless basis in 5 years. In Asia, that had a similar progression, but really just grew in market share. Areas like we talked about in Africa, mobile payments became the norm. And again, growth in terms of its user base. Yeah, I think the last 5 years really did a number and showed us that this was something we absolutely needed from a consumer side and from an enterprise side.
So I'm quite fond of the, by now, very old book, Crossing the Chasm, which is like about high-tech marketing. So it's the old classification of the first minorities, the techies who really get excited about stuff. And so that matches a bit against 2010 to 15. Mm-hmm. Then you get the visionaries who understand it. They are not necessarily technologists, but they understand the potential of the technology. Maybe that maps a bit against 15 to 20. But then you have the chasm that you need to cross to get to the early majority and then to mainstream adoption. And so if we can map this, we're at this pivotal point where in certain markets for certain functions, and clearly as far as WeChat is concerned and payments and the whole ecosystem ecosystem in China and beyond, we've crossed the chasm. But in other countries or regions, we're still far away from that. And we're global travelers, so it's great for us to exchange currencies quickly. But somebody who's an hourly wage earner somewhere in the US and needs to work 2 or 3 jobs to support their family, it's a different story there. So how we're going to square this up and cross the chasm for those people?
It's a great question. And I think it's a long road. When it comes to finance in its most traditional sense, everyone's mentality on it is very different. And a lot of that comes from how you were raised, how it was talked about, how you grew up with it. We talk about open finance as the next big thing, right? And one of your last episode, Token was on, and they speaking about how there's a great quote that open finance is going to be as important to the world as the internet once was. Right? It's just because of how impactful it is. That's true. The thing is, we can talk about that because that's what we do, right? As technologists, as innovators, as investors, we look for these things, right? We are those early adopters, those innovators. We thrive on it. But when you come down to the consumer level, it goes back, and again, specifically with finance, it goes back to how we were raised, how we were taught or learned about finance. And that is not something you can rush or change quickly, right? If you grew up in a home that finance wasn't something talked about, right? You had to learn it yourself. You may be, and you hold that very close in your example, you may be very hesitant to try some of these, call it non-traditional yet opportunities, unless they improve your life, right? So something like Zeal, just looking on the fintech side, I can now pay my rent through Zeal or send people money in through Zeal without any wire transfer fees. Okay, cool. Venmo or Square, right? Again, just using these basic examples, I can now get paid for a service without having to have this huge infrastructure, right? I can open a coffee shop on a cart and I can sell coffee on the beach to whomever and just get payment for it, right? That's a frictionless thing. That's survival for business. But when it comes to my personal cash, right, I might be a little bit hesitant to jump on those things until I explore them, until I understand them, because that's how I, in that example, was raised, right? I wasn't taught, it wasn't talked about, so I had to figure it out for myself, and I want to protect what I figured out. So now you look at that late majority. The early majority may be those where they grew up or historically had very open conversations around finance, right? Very openly saw the ups and downs of things like the public and private markets and were in tuned to what was commonly going around in the world, and they know how to be opportunistic and maybe hedge against certain things. I'm being very, very broad in my examples, right? They might be more of those earlier adopters or early majority. But to cross this chasm, it's going to take a very, very, very long time. And it's going to take an incredible amount of trust, more than I think people give credit to right now. And that some of that trust is going to come as the financial institutions as we know it, or corporations, which we can come back to, put their hands into the bucket. When JP Morgan, as the example, comes out and says, hey, we're going to offer you this service, this new technology, right? It's going to help you do X, Y, and Z. It's going to make you more money. Well, people might be more apt traditionally to jump on that because JP Morgan is a brand and a name and something they trust, and they grew up with that. Whereas startup A comes out and says, hey, just give us all your money and we're going to make you more money, might not be so hot to jump on that. And again, very, very broad, generalized examples. It's a mentality. We have more and more corporations who are looking and are getting into becoming financial institutions in some way. And that's not new. It's there. And it's happening more, and people are more accepting of it than they ever have been. And a lot of that, I would almost say, came into play thanks to the internet. Well, of course, it came into play with the internet. It came into more play with mobile. It came into more play with social. This is kind of that next revolution where people have figured out or starting to figure out how and where they trust without getting into the data conversation, privacy. Things are becoming more frictionless, right? Apple, you buy an iPhone through Apple, you can finance that iPhone. You can use Apple payments and have an Apple Wallet and have an Apple Card. So now you've financed it through Apple, you paid for it through Apple, you've got a credit card now through Apple, and you're getting rewards on cash back to spend on more things on Apple. Apple has now just become a fintech-based company, right, at its core. We're seeing more and more of that. Again, that model's not new. They're just doing it in a more progressive way. I mean, there was a reference I saw on Twitter the other day about Sears. As a retailer, we historically had a ton of financing it did. I didn't know this, but apparently they actually did a ton around mortgages and homes. The short version of the story, and I'll give what I remember versus butchering it. There was a time in Sears history where lumber sales were falling, building sales were coming down. Someone in the company actually come up with this idea of building kit homes and selling these homes that you could just go out and build very quickly, right? Kit homes. And that took off. And so Sears was a financier of that as the company to us as consumers. Point being that how we fill that gap, long story long, is it's going to take a lot of time and it's going to take consumers getting comfortable. And we're in that process now, right? Becoming more trusting, figuring out, and we saw that with the sharing economy. Going back to the WeChat example in China and Asia, all of that stuff was very seamless. You could share, you could pay for, and there was no concern or even forethought of, should I pay $1 to rent this umbrella, right? Should I pay 50 cents or $2 or $10 to go bike from one side of town? There was no thought of that. You just did it. Globally, that's still becoming something. So I think you've got, again, a long journey. You've got consumers and you've got enterprise. Enterprise will get more involved. Consumers will find in the revolution as we migrate through this, that next stage of being a part of this. And those who just consume will have a longer time to then those who consume and also do business with this technology. So like the Square example.
I think it was a very important point in there, right? We can build all this infrastructure and wait for people to come, or we can actually take steps to make that path easier for them. And I think you're absolutely right. If I look back at my education, right, you had like geography every year in high school, and how much of that is actually useful? Would it have been useful to get some true financial education as to what is money, what are stocks, how do you invest, how do you secure your pension when you get old, which is a hard thing to listen to when you're like 15 years old, right? I don't want to listen about like what I'm going to do at 65. I have a few friends who are really passionate about that, and there are clearly also some apps being built where you have your digital piggy bank, right? So you get your pocket money into the piggy bank, and when you fractionalize anything, there's no reason why a 8-year-old can't take 50 cents and put them into a fractionalized Apple stock and actually learn that over a year, if you forego consumption, you're actually making a profit. And that part of education is largely missing. And as you say, that is not an easy thing to bridge. Obviously, if we start that young, it will take a generation to change it.
Well, we don't think that way, right? We think in wholes, not fractions. So it's a great example. And when I spend $1, I spend $1. I don't think, well, if I spend $1.25, I'm actually saving 75 cents, right? Or if I buy this in Bitcoin or digital currencies did a very unique job of this for some of us, right? And training us on this is like things can be fractionized. I can give you $1 and that dollar can give me 0.1 or 1% of a stock, right? Or a currency. That's not how we think. And that is a complete mind shift for the majority of the world and the idea of fractions, which is crazy because going back to your example, in primary school and in school, we're taught fractions, we're taught wholes and fractions. But when it comes into financial, we go to just a few decimal points and move on. We don't think about this concept that was introduced, part of the financial technologies, the roundup, right? Banks started doing this roundup savings where you go spend $1.25 on a transaction, you can round up the 75 into a savings account. Why did that take us 90, 100, whatever? Why did that take us more than 1 year, right? There's probably infrastructure, but outside of that, it should have been commonplace. And now you're bringing up exactly where we're going is the idea of this fractionized everything. From an education standpoint, absolutely. Like how we think about finances, sure, at 15, you don't necessarily need to understand how to open up a full pension plan, but some understanding of just savings, the idea of wholes versus fractions, what that all plays in a role, because some of that stuff later in life is very complicated and having a base is good. But where we're going next, and I talked to Andrew Romans, who is a very well-known investor at 7BC and Rubicon Ventures. We talked about his latest book and how this fractionized economy is starting to rise and where it could go. And, the idea that as consumers, yes, we could take $1 and buy fraction of a stock, but more and still make money off of it, right? That's the catch. And that we can also fractionize things like real estate, like other physical assets, right? Where digital assets and digital collectibles or NFTs, non-fungible tokens, come into very, very exciting world that we haven't yet gotten to. And Andrew gives this great example, and I'm going to borrow it from him, of, the idea of where things can really go with fractionized transactions with the underlying right infrastructure is, the idea that when we go buy something at the Apple store, and this is his example. Thank you, Andrew. When you go into an Apple store and you want to buy Microsoft Office, you either buy that with fiat, a digital currency, or you can buy that with Apple stock, a new concept. But let's just use for the example, we buy it with fiat. So we buy it with cash, traditional money as of today, the currency, we pay $100 for it. Well, on the back end, as that's all being settled, as Apple and Microsoft are settling that transaction, instead of that $100 being transaction between them, maybe it's actually stock. And it's actually Apple shares and Microsoft shares being exchanged for the goods and services that are provided to each other. So now you've got this whole new world of how business and transactions or commerce happens that can be done through a value of, say, a stock in fractions versus fiat. And when you get into the world of back to digital assets and collectibles, you look at another example aside from real estate, art. Owning a piece of art can be very out of reach for most, but it could be a good investment. Why shouldn't you be able to invest it? Why shouldn't you be able to provide your $10 for your 1%? And to your example, make a little bit of interest off of it. There's no reason. It's the mindset of wholes versus fractions. It's the technology or the infrastructure we have or have not had in place to start doing that. And we're getting there. Digital currencies have provided us a huge step forward in that. And then things like in the investment world, like syndicates have helped provide us that. The idea of even going down to crowdfunding, there's just all these things that have got us there, and we're coming into that next kind of fractionized concept.
Yeah, and for those who think we smoked something and we're in a different world here, paying for my new MacBook with an Apple stock, what we do have today already is that you obviously have loyalty points from too many vendors. I've got
Totally.
If I had a physical wallet, it would be full with loyalty cards, and you can actually use the points to pay in many cases. So if you can do that with points, there's no reason technically you can't do this with a different currency, and that different currency might simply be the Apple stock.
Right. Our brain, yes, exactly. And that goes into why this could happen very, very quickly, is that as consumers, we've had and played roles, in this progression for some time. It's just now we're starting to kind of realize there's other avenues for this, right? And as enterprise is also saying like, oh, we can offer more, right? So business is saying, hey, we can make more features, more products, more services, more revenue to keep our customers and to make us stay alive for a while. And customers are saying, well, what else can we do, right? How else can we do this? Everything that has happened back in our example of the last decade has really prepared us for almost a rocket ship, a bang, into this next decade. And not saying that just because of the stuff that you and I see and read every day on Twitter and other sources. We've been teed up for this. All the technology and things that we've been given. We saw the introduction of the sharing economy, which wasn't too new, but it was. And it was new because it introduced additional features. It made it frictionless. It gave it to us in our hands in a way that was faster, cheaper than ever before. And it scaled and it became a part of our lives. Now we look forward to the next 10 years and all of these things just get better. They just get more fine-tuned and they just improve our lives from a financial standpoint in ways that some we could never imagine, some we could, in ways that will just continue to be a progression on that.
Now, the one thing I must admit that I don't like in many of the current implementation of these points or crypto payments is that it often comes back to the traditional payment rails, right? So you get a Visa credit card, debit card, and somewhere in the background there's the exchange that happens, but ultimately you still incur the interchange fees, etc. And so the point in the token conversation that we had 2 episodes ago or so was essentially to take Visa out and make this a bank account to bank account payment and take the cost out of the system, which of course Visa doesn't like. Where do you see that going? Are we going to create these completely new rails and probably a long transition again from the current rails to the future rails, but how is that going to map out?
Yeah, I mean, right now we have to have those in place. You have to have that intermediary. We have to have that middleman, right, as it's referred to, because we have no other option in some cases. And it's hard to accept. Will we get to a point where that middleman is gone? Absolutely. But can we also get to a point where that middleman is multiple, right? Is exponentially much greater and play a role in what becomes a very big, mesh, big net? Absolutely. Will we have to go, and that's what goes back to my example of all these enterprises starting to wanting to become financial institutions. And Andrew's example of, trading the stocks for products around settlements is there will be a world where we don't need the middleman because everyone will be the middleman in that case, right? You'll just go institution to institution, bank to bank, company to company. It will just flow. But will there still be a need for Visa? There may need to be, and it may be a different role where, say, Visa, MasterCard, those players of the world act as sort of a checks and balances and kind of act almost as an example, kind of like a node validator to validate that this transaction did happen and that it was clear. It's not that you need your Visa card, but it's been Visa approved. And that blockchain definitely plays that role, making it trustless and on the blockchain for transactions. But there is a possibility that, we use the Visa blockchain or we use just Visa's technology to re-verify, depending on how this world shapes out. And I mean that in all ways, right? Of where financial technology goes. Trust and privacy will probably be more important than ever. And it won't be just one layer is everything. It could be multiple layers of trust and privacy and protection that you feel comfortable or you will want to have. It may not be the physical credit card that you hold in your hand. Again, it may just be that layer of trust, like VeriSign was for so many years. It's just that inherent added level on top of something else.
To continue with that, obviously living with the internet that has been built a long time ago and never with the intention to service the globe with transaction services, never mind digital identity. So what is really missing in Web 2.0 is the digital identity component. And lots of the discussion around Web 3 is how do we create that so that we can get back to trust and trusting who's actually the other party. And I don't necessarily have to know this. I can do this with a zero knowledge proof, for example, but the different mechanisms of identifying that I actually can trust that other party or that mesh that you describe. And we're completely lacking this at the moment. So we're building on a very shaky foundation if we're building on the current system.
Yeah, and look, a lot of people will tell you we agree. I mean, we're building on a shaky system. We've seen examples of that, right? And that's okay for right now because these things need to be worked out. We need to test and try things and challenge certain norms, if you will, or services to make sure we get it right and see what was originally broken, right? Or what really does need to exist. So that's okay that it's shaky at the moment. Going forward, it can't be. To your point about digital identity and authentication, I couldn't tell you how many conversations I've had in the past week around this. And it's actually was one of my big predictions at the end of 2019. And again, in February, when I presented a bunch of research around the industry of blockchain, was one of the emerging categories and opportunities was this digital identity and digital authentication, because people want it, people need it, and it has been missing. People want to control that in some way, but also there needs to be a better way to do it. I mean, right now we have some really good emerging companies out there that are working on this. It's been lacking a very big gap, I would say, in this whole ecosystem where development happens. I mean, just look at something as basic as, the driver's license. To get an enhanced driver's license in the States, right? So we had this thing in place where we had to get not just a driver's license, but the enhanced version of a driver's license to fly. The process to get that was originally so friction heavy, it was silly and it took so much time and stress. Why couldn't that all be handled on a digital level? At the same time, when I engage with an app, why do I have to do KYC, know your customer, or why do I have to prove it's me every single time in the same or slightly different manner every single time? Every single app has the same process. There is a huge opportunity to streamline that, to provide that as an add-on into these products that were Web 2 and are going to be in Web 3. If anything, that will be one of the biggest things focused on in Web 3 is protecting that identity that we have, because it's something that we hold dear. It's us. And there has been nothing but data leaks There's been nothing but privacy issues, nothing but these instances for the past, again, in our timeline, these 10 years that people just don't trust it anymore. I think you're going to see, and I know you're going to see actually a big shift in that. I mean, even Apple now has moved forward, and it's a different step than others, but Google was doing it as well. But now on the phone, on the iPhone, you can actually log in or connect through Apple, right? Sign in through Apple. That wasn't something we had a year ago. It's not a digital identity in the sense we're talking about, but it is another step for the average everyday consumer to understand what this means and what responsibility it holds to where it can go. Yeah, I can tell you there's a lot of companies working on this. To me, when I look back at the bigger picture of decentralized applications, so DApps, which leads into DeFi, so decentralized finance, and overall where we're going with Web3, it's one of the most important areas to focus on without question, right? When you look at the development of an app, its infrastructure, we have a lot of that in place. Carry over from cloud, carry over from what blockchain infrastructure already exists. The APIs, the data layer, the front end, those are there. They can be enhanced, but they're there. What we're really missing is how that authentication and how that identity will play and how it will be protected and what it will look like across the board. And, when will we feel comfortable using one or many of these services to protect everything? Because we're no longer talking about our email, our social, our handful of apps, and in some cases financial. We're talking about it all in one spot. It's an evolution of what we have, but it's still a little scary for most.
Whatever people thinking about, it might be multiple identities or an anchor identity, and then kind of subsets for specific purposes.
Right.
So it will be an interesting space to watch.
Yeah, that's a good example. It could be a master series, right? You have a master identity. I'm Kyle. Similar to the way we're given a social security card in the US. That's tied to you for life, unless you lose it and you have to get a new one. But that's your master. From there, you could have a series of different identities, right? You have your financial identity that handles all finance. You have your social identity that holds all your social. Think about the differences between your social identities. How you represent, just on the representation level, okay? First, how you represent on LinkedIn versus Twitter versus Facebook. Then, not just how you represent, how you communicate, how you authenticate, what you share, what you value. All these things start to play a role. And then, and this comes out of a conversation I had with a venture fund earlier this week, is trust. Trust now comes into play around the identity and authentication. Anonymously today, you can go out and say whatever you want if you want to on social media. Right? You and I can say this is the greatest thing in the world, but who's to say that we're a trusted source? Who's to say that the mean things that someone is saying is right? So there's that layer of trust that could be added in such that you know who's saying. You have validation that Kyle's 2020 predictions for blockchain are valid because he researches blockchain. Fine, right? That's the connection point, and you see that, and it's there. So my social identity when it comes to the word blockchain has a verification on it. Today's example is Twitter verified. Tomorrow's example is this next world of identity and authentication at its basic level, right? There's so much more that can be done with it and will be. Think about cross-border, not payments, but travel. Carrying a passport no more. You look at how you move through the EU pretty easily. What's not to say that we can't integrate into an app that's just the travel app, and we have all that there.